can turn your videos on, Rachel and Mandy. Good morning, everybody. It's Catherine Cooke here, leading business advisor and founder of The Engine Limited and an expert in business entrepreneurship. And today I will be discussing why getting advice around big life financial decisions will save you money and stress. Have you ever been in a position of finding that dream home or that business and the bank said no to your loan application? Well, today, in moments like these, we're going to talk to you about how having the best advice will help you be able to make those decisions better and get that big yes. So today we've got Mandy from Vital Body joining us. Good morning, Mandy.
Good morning.
And we've got Rachael, the smarter mortgage lady, who's also a financial advisor. And I understand, Rachael, that Mandy's a client of yours, right?
Yes, that's correct. Morning. Thanks for having us.
No worries, no worries. So I'm going to kick off with you firstly, Rachael. Firstly, how are you doing?
Oh, good. Doing okay. I've got quite a bit of work on, so that's a good thing right now because it's not the same for everybody. So.
Absolutely. And nice to see your hair growing longer like mine as well.
yeah, just don't look here.
I think we're all in that same boat. How many people I'm seeing put up posts saying that they've gone to the supermarket to fix up their regrowth.
We'll all be talking like this.
Absolutely. And Mandy, love the stairs behind you. Please tell me.
Yeah.
You do those stairs about 12 times a day?
Yep, it's my exercise for the day.
And how are you doing?
Pretty good. I mean, definitely up and downs, like a lot of people in our position. We're thankfully just able to start seeing patients, urgent cases at the moment. So that feels like a little bit of reprieve for us and nice to be getting back into some form of normality.
Absolutely. We were just talking about that before. Obviously we've all been in lockdown for quite some time now, and our bodies are taking a bit of a toll. I mean, I know I started this morning with a really sore neck and already been on a call with someone with a sore back. So I think that you're going to be in strong demand and need to pace yourself with burnout as we go back into it as well, making sure that you look after yourself personally.
Yeah.
So look, Rachael, if we just kick it off with you, I mean, obviously you and I have had many discussions over the last few years, about people and putting your best foot forward. We all get emotionally attached to that house but there's some best tips that we can actually be putting in place before we actually even go start looking. And I'd like to dive into that first off with you. So what would you recommend to someone right now who is looking at buying a home, whether it's their first home, another home or whatever? What should they be doing before they start looking?
Sure. A really important thing is actually their budget. Firstly, spending less than you earn. And I know it sounds really simple, but a lot of people are living, kind of paycheck to paycheck or, income to income. So also minimizing short-term debt. One of the things that people do is when they're renting, they'll go and buy a vehicle using finance. They'll have credit card limits and the bank keeps giving them a higher limit, and so they keep taking it. And personal loans, student loans, things like that. So really reviewing the short-term debt position is massive because that can have a real effect on servicing. The other thing is just looking at where your money's coming from and what you're actually doing in terms of savings. So KiwiSaver has been massive for first-home buyers. I know for Mandy, that was something that you utilised. It's a forced savings system for people, and it's meant a lot of people have actually got into a first home.
And so, Rachael, if we could just start off with your role. I mean, obviously you are helping people to get their dream home, through, obviously putting their best foot forward. But, why a financial advisor? There's been plenty of people out there who are mortgage advisors who aren't financial advisors. So what's the difference between a financial advisor and a mortgage advisor? Or, as I understand, it's all regulated now. Is that true? Yeah,
it is. So as of March this year, basically you have to be accredited in the strand that you're advising on. So I'm a financial advisor, it's called now. They've removed all the registered and authorised financial advisor titles. And I'm accredited as a residential lending advisor. So that means I can broker a mortgage between you and either a bank or a non-bank lender. And I'm also an accredited insurance advisor, so life and health, personal insurances like trauma and income protection and things like that. And when I'm dealing with people from a mortgage perspective, I actually try to limit my scope of service to their mortgages first. And again, I did the same thing with Mandy, so I think that that's a really, good example. And then down the track, I can actually then talk to them about their insurance or refer them to someone to do it as well.
Oh, that sounds so good. So I'm thinking, how much is this going to cost me?
Yeah, actually I get asked that question a lot. Generally, I actually don't cost anyone a cent. And that's because I actually if I do my due diligence right, I can help you get a mortgage, get pre-approved. And then when they buy a house and it actually settles, then I get paid by the bank. And generally, if I know that I'm going to do a lot of work and maybe not get it across the line or not get paid, I may agree with that client to charge them a fee up front. But generally, 9.5 times out of 10, I'm actually paid by the bank or the lender.
That sounds awesome. And Mandy, if I could just come to you now, Vital Body, what's your business about? I mean, obviously it's probably self-explanatory, but are you accredited as in being able to do ACC? Are you master?
Yeah. So we're osteopaths, and we undertake 5 years of training, so it's quite a slog. And we're registered with Osteopathic Council of New Zealand. We are ACC accredited, and also a lot of health insurances cover our treatment as well, depending on the coverage that you've got. So all legit.
Absolutely. Well, I was hoping you were legit, but I guess when it comes to borrowing money, and what I know when people are self-employed, it can be quite hard trying to get your borrowings across the line, because when you're self-employed, the income's irregular. You don't have an employment contract necessarily in most cases. So why would you go to someone like Rachael instead of going direct?
Yeah, so I personally, I'd been to, I think, 3 other mortgage brokers before I saw Rach, just because I had done the math myself, and I'd already been paying quite a lot in rent, more than I would potentially be paying in a mortgage. So, that was part of the frustration for me, is why I couldn't make the two connect. And unfortunately for the 3 I saw before, and I don't want to knock anybody, but I think they just weren't experienced with people in business. And it was a pretty hard no. Like, it didn't even kind of look at the numbers, didn't even bother crunching it, just went, whoa, that's too hard, not having a bar of it. So I was really disheartened for a long time, and I'd kind of parked it and thought, again, although the math works for me and I can't see why I don't have a mortgage, here I am sitting here not having one. So I feel incredibly lucky that I stumbled across Rach, and Rach said, yeah, actually, let's look at those numbers and we can make that work.
Oh, that sounds awesome. And look, in moments like this, as I was saying before, it can be really easy to give up on owning your own home, or needing to sacrifice every dollar to pay your mortgage just to buy that house. So, being a business owner, that journey can be even harder. So, having solid advice and a sounding board to lean on can give you that extra push and support to reach the finish line. And Rach, I love your passion for your clients. Like, when we step out and we go and do those quarterly breaks on Waiheke Island, which hopefully we can get Mandy along to at one.
Yeah.
Hopefully we can get back to Waiheke Island. But we might have to get your walker out, right?
I think so. Paddle over there.
Paddle our own canoe, absolutely. But what I really like about your passion for your client, Rachael, is you talk about not leaving any stone unturned. You talk about no's not a no forever, it's just a no for now. So how do you keep your clients motivated when you do get that no, Rach?
Yeah, I guess it actually speaks to my own story. So I, like Mandy, was self-employed when I bought my first home, and I went to the bank and they said no. And I was trying to buy my first home with my sister, with a little bit of help from mum and dad, because KiwiSaver wasn't around, so utilising their house. And I think having that personal gut understanding of how difficult it is to get that no, engaging a mortgage advisor and then going back to that same bank and actually getting a yes was kind of the foundation for my philosophy of, and then it might be a no right now. And I know Mandy and we had this conversation because initially we got no on the numbers, and then when we got the numbers right, we got no on the property, and we're like, we had tears, and we're about to go out and socialize, and
I had tears
and hugs, and I was crying on the phone to the bank, and and then the it's not right now, and it's not this property, but where to from here. And what I really love doing is putting a plan in place with people. I love looking at their budget with them and going, well, you're spending more than you earn, or you don't quite have enough deposit, or right now you're an apprentice, so when you actually earn a little bit more, then we can potentially get you a higher mortgage. And I find self-employed people, because they're living it, that they're actually quite challenging to work with, because they're seeing they're earning X, but after all their expenses, actually what they're using in the mortgage application can often be half or a third of what they're actually bringing in. And I'm having those conversations with them, like, yes, I get it, I know it's frustrating, but this is the way that it works right now. Yeah.
Oh, look, absolutely. And even as a business advisor, what I'm struggling with is the amount of business owners that still don't have a cash flow. So they actually, they go, well, I've got my profit and loss, and then they go, but I've got no money in the bank. And it's like, well, you actually need to understand where your money's actually going. And also, if you're actually outsourcing part of your functions in your business, you actually need to understand that the person that's managing the outsourcing is actually, putting, the right things in the right place. So, just coming back to that cash flow, it's so key critical, isn't it, Rachel? Like, when the banks are looking at the business in itself and your earnings, they're looking to see that you actually have sustainability, that you can keep paying that debt. So it's not just about having the biggest deposit, serviceability. So, do you want to give a bit of a narrative around that?
Yeah, look, again, this is something Mandy and I talked about when we were doing her application, and often with self-employed people, whether they're buying that first home or next home, is what people are actually bringing in from a gross profit perspective, and then what their expenses are. And particularly people working from their home office, they're writing off everything that they can, so they pay, they have the best tax efficiency. And ideally they're wanting to pay as little tax as possible, because they're making everything efficient by using that home office. But from a lending perspective, you need that income as high as possible so that you can borrow as much. And again, almost every day I'll have a conversation with a self-employed person who has a property, who has a mortgage, or who's trying to do it. And what they don't get is their scenarios here. Their real scenario of what they bring in, what they can afford is here. What happens from a lending perspective is there's margins built into the equation. So the middle line's here, but there's margins built into it. So from a servicing perspective, the interest rates might be at 3%, but lenders are looking at servicing at 6 and 7%. Absolutely. And so they've built in this margin for risk. And then if there's a rental income, we're actually only able to use what was 75%, maybe even now 65%, because of the changes to the investment lending. And so you've suddenly got this margin for the bank where there's less income, there's more from a servicing perspective, but your real scenario's here. And so it takes a bit of explaining to actually get that across, and not everyone gets it, unfortunately.
And look, realistically, as much as people don't like hearing the no is actually saving us, because the no means we need to go back and just really look at what the figures are, or what we're looking at trying to do, and just actually try and, sort of, I don't know, pull the puzzle apart and put it back together again. So, Mandy, how did you keep motivated during these no's?
Well, I call Rach Pitbull, so I knew she had my back and she was going to go for it. And just on a couple of things that you've just said, actually, I think it's really good if you get a no, because there's financial responsibility. Like, if you can't service the mortgage, you shouldn't be taking on the mortgage, and so it's really good to have that honest and frank conversation as well.
Yeah.
But the nice thing is that there's hope. I speak to a lot of business owners who kind of go, oh my God, it's never going to happen. It's never going to happen. And I think actually, if you just run the numbers or speak to somebody and find out, there's a lot of hope out there too. So don't become too despondent with it. And I guess that's kind of where I was at in terms of staying positive throughout this journey as best as I could, because I knew in myself that I could easily service the mortgage. I'm a pretty good saver. One of the the great things about the long period of study that I've done means that I've been a poor art student for a long time. So I also know how to live basically if I needed to. So that's kind of how I maintained hope. But I was, again, grateful to have Rach batting for me.
I love actually what you're saying, because really what you're saying is that through the study, I mean, although you're studying, it is kind of like adversity. You can't actually have what you want to have. You've actually got to limit it. And when you actually go through those moments of fragility, let's just say, it does enable you to build that resilience that you need. And I love how you're talking about Rachel as being a pit bull, because Rachel, you are a pit bull. But you need to have someone in your corner, and people say that to me as well. They go, Catherine really challenges me, which is kind of like a pit bull. But at the same time, of course, I'm going to challenge you, because that's what you're paying me to do. And in the same respect, you're not paying Rachel. She's paid by the bank. She's paid by the bank to make sure that she mitigates the risk for the bank and for you. And that's really the bottom line. If I come back to, what you could probably do to set yourself up better before you actually even go out and look at a property, go and get yourself pre-approved. Go and look at where you need to be, so that when you turn up at the auction, you don't start bidding on something you'll never have, and then you'll be in an absolute terrible situation because it is an auction and you've got to go forth with it. So Rachel, how do you prepare your clients? Because let's just face it, this is an emotional decision that they're making, and then you coming in, the voice of reason, and they're actually having to stop and listen to you. But sometimes they don't have their ears on, as I say.
No, 2 ears, 1 mouth in that order, eh?
That's right.
Yeah, pre-approval. First, last year, I did a lot of weekly summaries and monthly summaries, and the first thing I was saying to people was get pre-approved. There's no, like, for any of us, regardless of what you're buying, if you go out shopping for something you actually don't have the money to spend, then you're going to get disappointed. And then just coming to your point about an auction, firstly, it's an unconditional offer. So you need to be pre-approved from the numbers. But the other thing that some people actually don't realise is you need the bank to have approved that property, or the lender, because you go out and buy that unconditionally and something's wrong with the title, or there's some unconsented works, which happens with a lot of properties going to auction, then you are up a creek without a paddle. And that is a pretty scary position to be in. So pre-approval, formal written letter of offer before you go shopping. Absolutely.
And look, I was talking to Monica Moore on Thursday, and we're talking about perspective and decision making. And, people get so caught up in that whole emotional element. So once you've got the pre-approval, take your best mate along, someone who's going to basically pull you out when you need to be pulled out, or do the bidding for you at auction. So let's talk about you buying your property. Was it an auction, or was it just a general sale?
No, it was a general sale, but I actually went into the access ballot for a first time because I had because I made the decision to pay my way through uni. I didn't want to have any debt, which was a good thing and a bad thing, because I kind of popped out the other end.
How can it be
holy
a bad
crap,
thing?
The housing market had exploded, and I went, wow, and now how am I going to do it? So I actually qualified, thankfully, for an access home. So I'm really, really grateful for that. And it just meant that I could get in with a small deposit because I was doing it on my own. But also I set myself some pretty realistic expectations about what I could afford to get. So obviously I would love my first home to be a beachfront property in Takapuna, but that's not realistic. So yeah, I think that's a pretty important part of the buying journey as well.
Explaining that, Mandy, it's so an access home, and the ballot is actually a new build, Catherine. So
I was just going to ask that question, Rach.
Cool.
So do you want to just give us some more narrative around that, Rach?
Probably Mandy knows more about it than I do, but I've got a number of clients who went through, Mandy's situation was unusual because she actually went into a couple of ballots, and the first home that she got pulled out for wasn't big enough for the bank to lend on. Like, go figure that. You go through all that stress and all the AML, all the identification. Mandy had to go to 3 different places, dealt with some horrible lawyers to try and ID yourself. Remember all of that?
Yeah,
everything was in triplicate. And then she got her name pulled out of the hat, like, go figure, it's like lotto. And then the bank's like, oh, sorry, the property is not big enough. And we're like, what the? How can you? What? Why would you? And
Yeah.
then anyway, lucky, who does this happen to? She got a second opportunity, and the first people whose names got pulled out turned down the property, and then Mandy got the lovely home that she's in right now. And essentially affordable homes. So there's a number of different developers and businesses out there in Auckland, for example, Whanuapai, Hobsonville, Northcote, just to mention 3 that I can think of off the top of my head, where Te Aratu as well, where they are building brand new homes, and the developers have to put aside a percentage of smaller versions of those homes for first-time buyers. And I actually wrote a blog about it off Mandy's experience on my website, because it was massive, Mandy. It was just the ballot, the buying, and then even the sale and purchase agreement, something like 55 pages long. It's horrendous.
Yeah, but also an amazing opportunity.
Gosh, yeah.
Well, amazing opportunity with that amount of stairs. Was that considered a low?
I know.
You needed to be climbing. So Mandy, if I can come back to you, as a business owner, and obviously COVID's now hit and you've been affected and you've got staff and all that, how are you managing your, you've got this mortgage, you've got your lifestyle, and then suddenly, boom, an external situation outside of your control happen. How do you manage all that, just not from a mental point of view, but from a physical and an emotional space?
The question's for me, sorry?
Yes, Mandy. So how do you
I think this lockdown, when I came into it, I've spoken to Rachel a little bit about this too, from a mental point of view. I had fortunately just finished reading Emotional Agility by Susan David. This is not a plug, I'm not paid by her. And it's just about adaptability and accepting situations that you can't control. And obviously none of us can control this. So you can either beat away at it and burn yourself out in terms of mental fatigue during these lockdowns, or you can just put your hands up in the air and say, you know what, I don't get to control this one, so I have to just write it as best as I can, and maybe take it as a career break, or I've heard some people say it's their pre-retirement, retirement, or however you need to look at it mentally. That's how I've kind of gotten through it so far, and I think we still have a little way of the journey to go yet. So yeah, that's how I've handled it mentally.
And
financially,
what about
with the mortgage?
Yeah, financially, how do you manage? You've got the mortgage, you've got business debt, you've got ongoing commitments to vendors, leases.
Yeah, and I'm going to be really frank with you on this one as well, like difficultly financially, because the wage subsidy, I think a lot of people think that this is amazing amount of money. It's not. So most of us, it doesn't even cover our mortgage and the clinic rent, and for us, all of the PPE gear that we have to purchase. Like there's some pretty huge expenditure going out at the moment. So I personally, I worry about families with young kids and stuff who are business owners. I wonder how they're feeding them right now. Like it's got to be pretty scary for a lot of people. For me personally, I always kind of had a mindset that I needed to have a 3-month buffer put aside. And so even when we went into out of work, I immediately tried to refill that buffer between the lockdowns so that I had some money put aside, and that's what I'm tapping into. I'm also really lucky that Rach made me set up because my house was so delayed in my build, which is quite common for new builds. I was able to save a chunk of money before I settled, and I wanted to put it on the mortgage, and Rach said no. She said put it in a, what is it, Rach? Is it an offset account or something?
Revolving credit. Yeah,
revolving credit. Yeah, so I've got a chunk of money sitting in there, and that's probably my sanity, peace of mind money, so that if hits the fan, then I know I'm going to be okay. Like I've got a little bit of money available for me if I need it.
I'm just hearing more and more about the invaluable advice that you are getting from Rachel, and Rachel talks about that it's not about just doing the deal and then she walks away. She's there with you for the journey. And Rachel, you've talked about also about how you assist your client in being able to pay off their mortgage earlier. So do you want to just talk to the viewers about your...
Absolutely. Yeah, and that kind of flows on really nicely from what Mandy was talking about. Last year with the first lockdown, a whole lot of us were just thrown into this. We've got no income, we've got mortgages, what do we do? And the true value of the loan structure that we set up for people like what Mandy's talking about really paid dividends. I had something like, for 2 weeks, I was talking to people on the phone crying and worrying. This was last year. And so that's my kind of foundation for this year and what might have happened. And the people with a revolving credit facility or some savings that were offsetting a portion of their mortgage were the people who generally actually didn't have mortgage repayment deferments, which are termed a holiday, but they're not a holiday because they're not like going to Raro. You actually have to pay eventually. And you know what? I experienced that personally years ago, and it's not something I want people to experience. So loan structure is massive. It needs a spread of risk. So, and I talk to my clients about this all the time. You can do whatever you like with the numbers and your terms, but I want you to at least have 2 fixed terms rather than 1. Because if interest rates go up like what they've been doing recently, there's talk about it happening next year. It's happening now. It's happening today. It happened on Friday. It's been happening for 6 months. Is that spread of risk so that your whole mortgage is not exposed to the interest rate change. And again, I've experienced it. It was the worst year of my life owning property about sort of 10 years ago. Interest rates went up and I barely could actually eat 2-minute noodles. It was really awful. So I don't want that for my clients. And yes, you could have your mortgage fixed on 3 or 4% and interest rates go down to 30-year lows like they did. But, if you have a spread of risk, you can go with the dips and you can go, you can ride out the kind of raises as well. So peace of mind, Mandy talked about peace of mind. So having fixed terms actually gives you certain cost so that when people go from renting to buying their first home, they want to know how much it's going to cost them. They want to know if they can afford avocado on toast rather than 2-minute noodles, and to have a few coffees or to have a wine on, the weekend or whatever. And the other key thing which you've just asked about, Catherine, is flexibility of early repayment. So there's a couple of ways of doing that. One is having a portion in your revolving credit facility, and often with people buying first homes, they start really small so that they get to know it and manage it. And year on year, I want to actually touch base with them and review that. And often people do things like they set and forget, and they forgot why they did it and the reasons behind it, etc. But having that ability with some floating mortgage to be able to put in that surplus to help offset your interest costs is key. And if you're refixing your mortgage and you can manage to keep your repayments the same if the interest rates luckily go down, that also helps you pay off your mortgage voluntarily faster, which saves you in total interest as well. So kind of long answer, but massive key part of my loan structure conversations with clients.
I'm glad that you actually mentioned that because obviously we did the same thing. Interest rates went down and we kept the payments at the same amount as if the interest rates were higher. And not everyone can do that. I appreciate that. I mean, look, even reading the Herald this morning, really sadly reading the Herald this morning about, people having to go to rubbish bin to get food out to feed their children. There are some really tragic situations that are happening across New Zealand. So all I want to say to the people that are watching this, is if you can help others, but make sure you've helped yourself first, because obviously if you are going to the bank and you are needing to get some money for your business, the bank's going to be looking at the things of what you have done or haven't done. So if you've been repaying larger amounts, they're going to look at you more favourably. If you've been paying off your credit cards, they're going to look at you more favourably. Just be really certain before you go and do that deferment that is a last resort, because as Rachel said, you're still going to have to pay the interest, plus they'll also look at you, the bank will also look at you around your serviceability and your management of your serviceability. So Mandy, just want to come back to you. Obviously you are now able to sort of be back kind of under really strict conditions, kind of. So that's got to obviously be putting a little bit more ease, for you, although you just said you're having to pay out a lot more cost than PPE gear. How are you managing that? I mean, obviously you've got your revolving credit facility, but, you're chewing down that fat? How are you going to get that fat back up again, you know?
Yeah, it's something that we've been debating, and we've only literally just started opening for urgent cases, so it's still pretty early days for us in terms of, you know, if we're lucky, it'll probably cover our rent because there won't be a heck of a lot of people that fall into that urgent case category. Although I think they are making an announcement this week to afford a little bit more flexibility to us. But yeah, as an industry, we've been discussing how we recoup that, whether we put our fees up, which we're not really excited to do, especially in a world, as you've just described, where everyone's doing it hard. And also we're going to have to space out our appointments a little bit more. So there's a lot more downtime where we don't have earning potential. So, you know, it's going to hit the business for a while. But I think so long as we're back and working and earning, you know, that's some positivity that we have to hold on to.
I love your resilience, Mandy. Like, you know, clearly you've put in place some really solid discipline to get to where you are now. And so we can wrap this up, ladies. Mandy, I'm going to start with you. What would be your top 3 tips for a viewer watching this in terms of trying to get, you know, financial relief, or even just look at their financial position? What would your top 3 tips be?
Probably the best advice I ever had is the one I told you at the beginning, you know, like have your 3-month buffer. I was told that right when I first started out as a business, and I did it thinking I would never ever have to use it, and look at us now. So I know it's hard now when people aren't earning a lot of money, but that would be my thing. And just simplify your life. I mean, I've traveled the world, I've lived out of a backpack, you know, there's a whole lot of stuff that we don't need. People and experiences are more important. So stop stressing about online shopping and all that stuff that you don't need right now anyway.
Oh, I absolutely love that. Although, yeah, you might have to come and help me reduce my bag to a backpack, because I've always struggled being a fashion buyer for many years. Trying to get that one suitcase down to like a little bag so I could bring stuff back was always a challenge.
Yeah.
Rachel, so Mandy, those were awesome tips. And, you know, that 3-month buffer is so important. I also say to people, make sure you've got income to pay yourself in the bank account, because the business isn't going to pay you probably for up to a year. And they look at me like, really? And I'm like, yes, that's the reality of life. You've got to pay other things. Rachel, your top 3 tips.
Mine is budget. So knowing your numbers, what's your income, what are your expenses, and what have you got left over? And it's often something I use to actually help people with their loan structure. So looking at that surplus. But as Mandy said, and I know Mandy's been doing a bit of this over lockdown, you know, while she's had spare time, is reviewing what you're spending your money on. What are your APs and direct debits? And are they things that are super important? Are they needs? Are they just wants? You know, particularly if the money coming in is tight, or you're looking to save. Get into KiwiSaver. If you haven't bought a home first, get into KiwiSaver. I'm not accredited to advise on KiwiSaver. Previously, I gave general class advice, but KiwiSaver has helped a number of people get into their first home with that forced savings. And if you're employed, obviously your employer tops that up, which is huge. And the other thing is reducing that short-term debt. It really affects servicing. People say to me, oh, I've got a 10 grand credit limit, but you know, I pay it off in full every month. Well, the difference between having 2 or 3 grand as a credit limit and 10 grand can be massive, and it can affect you, you know, to tens of thousands of dollars worth of borrowing. And when people are renting, they tick things up, you know, Afterpay, OxyPay, all of these things are you're actually credit checked for, and a lot of people don't actually realize that, and banks will pick up that in their credit checks, and often people have forgotten or they don't know. So short-term debt is huge. Review it. You know, can you pay it off? Yeah.
Really, really, really good advice there. And Mandy, you said that you had a few financial advisors before Roche. So who's your top financial advisor, mortgage advisor?
Well, I didn't have financial advisors, mortgage brokers. They were nowhere near as good as Rach. So yeah, Rach has been amazing.
There you go, Rachel. It wasn't even a paid advertisement. So.
Nah. I might have bribed her with wine though. Or not. I'm not allowed to say that.
Or not.
No,
Yes, no.
I think the real key is, if it's not me, if you're engaging a financial advisor, that what's the extra value they add. And often when people go direct to a lender, they're dealing with administrators, maybe people who aren't upskilled with knowing about business, etc. Because sometimes you're dealing with people, who maybe haven't had that experience. And like I said, my story provides the value that I add. I've had time in real estate. I've been a property investor. I bought my first home as a single parent. I was self-employed with my sister, with some help from mum and dad's, home equity. It doesn't get more challenging than that. But someone that goes into bat for you, it's super important.
Yeah, absolutely, absolutely. And look, just for the viewers that are watching this out there rather, not here, I'm the only one here. Basically, you only know what you know, and what you don't know, ensure you go and get some sound advice. So here at the Engine, we are a leading service provider to the Regional Business Partners Network, and you could get some funding as a business for us to help you in your business, build your cash flow strategy amongst other strategies. But do get some really sound advice, especially when you're looking at making some really big sound decisions, such as buying your home, such as any other life decision, buying a business. We're here to help. Ladies, thank you so much for coming on today with me and just talking about your own personal stories and journeys. And Mandy, I look forward to hearing more of your success and meeting you in person outside of this COVID situation.
Thank you, ditto.
And Rachel, you have an awesome week, buddy.
Yeah.
We'll catch up for our usual catch-ups that we do during the week. And
awesome. Thanks so much for having us.
No worries.
Bye.
Have a good week. Bye.